All right, we're officially live. What's going on, Pookie? Just went live on the socials. I'll give it a few moments for people to jump in on X and YouTube. What's up, everybody? So today we got Kinder Morgan reporting earnings and CACI reporting earnings. A pretty wild day in the market today. Pretty wild price action. Trump rolled back his tariff threats on the European Union. So that's why we saw the pump towards the end of the day today. Pretty wild market. I did do some live trading with our Discord members earlier today. Made some money on some puts, made some money on some calls, traded Tesla a little bit. It was fun. So anyways, just looking at SPY and Triple Q here. Regular session is over. The closing bell just rang. So let's look at the two stocks that are reporting earnings. We got Kinder Morgan supposed to report at 4:05 p.m. Eastern. It's about 4 more minutes for that. They've been trading in a pretty tight range for the past year. Basically 26 to like 29, $3 range. It's been a good stock to maybe do an iron condor on, rinse and repeat it. But their forecast EPS is 37 cents. Forecast revenue, 4.4 billion. And just a little bit about the company. They are an oil and gas. So they're an energy infrastructure company. And they own an interest in or operate approximately 79,000 miles of pipelines and 139 terminals. Let's go back to the sticks real quick. So that's the chart on the left here. They closed the regular session at $28.60. They were up 2.2% today. What's up, Nikki? Good to see you. Going into the earnings, they had a nice and positive PE ratio of 23, EPS of 1.22, and they pay a 4% dividend. I'm assuming that's probably going to be a quarterly dividend. Let's take a look. They paid the last one in November. What's the last ex-div date? And the one before that was July. So yeah, end of July. So basically every 3 quarterly dividend payment of 4%. So that's pretty good. And like I said, they've been trading in this pretty tight range for a while now. Looks like they've been trading in this tight range for about a year. It's like 26 to 28 and some change. Just looking at the income statement real quick. So they are a nice and profitable company. Positive net income every single quarter for the past 5 quarters back to back. Debt to asset 55%. That's pretty good. It's like a pretty healthy company. 71 million in cash and equivalents. I suppose that's not too bad for stock trading in the 20s. So it's pretty obvious where the levels are. Probably put resistance around 28.75. Maybe like right here. And then support, if they get a negative reaction, it's just going to be the bottom of the range, like 25 and some change down there. So pretty cut and dry on this one. We'll see what their reaction to the earnings data is going to be. It's 4:04. They're supposed to report at 4:05. Let me just go 1 minute chart here. And let's take a look. Okay. Still waiting on the reaction. It's getting a bit volatile. These candles are flickering pretty good here. Let's give it a moment. About 30 more seconds left on this candle print. And we'll find out what their EPS is and their revenue, any guidance. We'll find out when they're going to do their earnings web call and how to get there. Then we'll go from there. So still waiting on Kinder Morgan, but the other stock is CACI. It's trading in the 600s. They closed the regular session at $631.23. A little green on the day. Okay, here's Kinder Morgan on the left, getting some action here. Okay, let me refresh my other screen, see if we got EPS and revenue. I'm going to go to their investor relations page and see if they dropped a press release. Give me 1 second here. Okay. I got volatile there for a second. Wicked all the way up to 29.30. Came back down. Now it's just sitting here in the middle, right around 29. You got a buy side imbalance on the level 2 order book, so that's good. Okay, back up to 29.3. Looking good so far for the Kinder Morgan bulls. Okay, not seeing the press release yet on there. Okay, I see it right here. All right, so let's take a look at this. Oops. Windows 11, stop. Okay, I'll keep the price on the left here. You can see the stock price on the top right. So here's the press release here. So we got the fourth quarter 2025 earnings results. This is for the webcast, and they're going to do their earnings call at 4:30 p.m. Wow, look at Kinder Morgan, almost up to 30 now. Looking like a congrats to the KMI bulls. Got over 100 people tuning in on the socials. Good to see everybody. So we know their earnings web call is going to be at 4:30. And let me get the, still looking for EPS and revenue. Give me 1 second. And some presentations. Don't see the press release yet. But that's okay. I'll find it here in a minute. Yeah, I'm not seeing the press release on their website, so let me see if I can go to a different source here and get the results. Oh, I think I just found it. Here we go. Okay, so double beat. It's a nice little graphic here. So again, the EPS forecast was 0.37. They reported 0.39 for earnings per share. That's up 21% year over year. So that's good growth there on the EPS. And the expected revenue was 4.3 billion, and they reported 4.5 billion. Revenue is up 13% year over year. So good growth on revenue and EPS, and they got a double beat there as well. So looking good for the KMI bulls. Again, this stock isn't really a big mover. It's been trading in a tight range for the past year, basically. But nonetheless, getting a positive reaction. So that's nice to see. And we know they're going to do their call at 4:30 p.m. Eastern. So about 20 more minutes for that. And I'm going to post this link in the comments. This is how you're going to get to the web call. I'll put that on the bottom of my screen so everyone can screenshot that. I'll post it in the Discord as well. What's up, Jan Kohasik? I think I pronounced that right. Good to see you. Jan Kohasik. Okay, you're watching on YouTube. Okay, yeah, no, appreciate the feedback. I'm also streaming on X, and we got over 140 people watching live on X right now. Actually streaming on multiple platforms. YouTube's just one of them. But yeah, it's good to see everyone. It's Wednesday. Week's half over, well, more than half over. We just got Thursday and Friday. I mean, it's a short week, right? So market was closed on Monday. All right, let me go back here and see if I can find anything else. Give me 1 second. I want to see if I want to check the guidance and stuff. Let me go back a page real quick. My computer's bugging out on me. Give me one sec. There we go. All right, CACI is going to report in about 5 minutes. 5 more minutes for CACI. Everyone's drawing symmetrical triangles on X right now on the price action. Okay, let me scroll down a little bit more. We got that already. There are a few red line items on their earnings. I guess we can go over that real quick. Just other relevant metrics for the quarter, but realized operating leverage, they missed by 0.10x. Operating expenses were a bit more than they thought. Missed by 86% on that. Just a few negative things, but the main data at the top here is you got the year-over-year growth on the revenue. You got year-over-year growth on gross profit, which is great. That's up 54% year-over-year. So that's probably a big reason why investors are liking this here. And EPS was also a solid double-digit growth over year numbers. So the earnings look good. They look good. And again, they're going to do their earnings web call at 4:30 Eastern. Oh, Mad Maverick's in the house. Another one of our coaches over here in the Discord. Pookie's here. He's our lifetime coach. And Nikki's here. All right, let me go back to TradingView real quick. Go 1 minute chart. Kinder Morgan on the left here. Just want to draw some levels out and see what we're working with here. I'm just going to draw it down to right around where they close the regular session. So you can see they're sitting right here. Let me get rid of this indicator real quick. There we go. Okay, so you can see they're sitting on this 38% retrace right now. It's right around 29.30 a share. They had 17 million volume today. Average volume over the past 30 days was 12 million. So they had like 5 million volume, more volume than they usually do. 170 people tuning in now. People on X are just piling into the stream. I know our presence on X is a lot better than YouTube, but I stream on both platforms. I'm looking at the 61% retrace. That's right at 29 bucks a share, almost to the penny. That's probably my support level number 1 in post-market price action for the bulls. We'd want to see 29 bucks hold. This is, about 42 cents above where it closed the regular session, but nonetheless, it would still keep the stock green here in after hours. I feel like the price kind of just froze a bit. I'm not seeing much movement. Go to Webull. Still a buy side imbalance on Webull. So on the level 2 order book of what I'm looking at there. Okay, so we got Kinder Morgan's results. They're positive. Double beat, double-digit growth year-over-year for EPS and revenue. And again, they're going to do their call in about 15 minutes. And that's the link on the bottom of my screen. We'll take you to their investor relations page. And that's where you're going to be able to join the webcast. Okay. Let's go over to CACI. The stock closed the regular session at $631.23. And I'm just going to assume that they got pretty good fundamentals and financials if they're trading up here in the $600 range. But trailing 12-month PE ratio 27.88, nice and positive. EPS 22.6. Their free float's only 21 million. Doesn't really take a lot of volume to move this. And income statement on CACI. Well, first a little bit about the company. They're software and IT services. That's the industry they're in. And they're a provider of expertise and differentiated technology to customers in support of national security in the intelligence, defense, and federal civilian sectors. Its segments include domestic operations and international operations. Software and IT company. Probably got a bunch of government contracts and stuff like that. Solid company. Okay, let's go to the income statement. So they're also a positive net income, profitable company, 5 quarters back to back of profit and positive income. So that's good. Debt to asset only 53%. That's good. They got 133 million in cash and equivalents. That's pretty good. I mean, for a $600 stock, it probably could be more than that, but 133 million is still good. So that was good. We go to this is the 1 hour chart here. Let me go to 1 minute. The data should be out. 4:15 on the dot. Let's go over here on my other screen. See if we got EPS revenue. Almost 200 people tuning in now. What's up, y'all? I was telling people at the beginning of the stream I was doing some live trading with our Discord lifetime members earlier today. It was a good session, good scalping session. We had 3 trades. First 2 trades were winners. The third trade was a break-even trade, so it was nice. All right, still waiting for this data to drop on CACI. Should be any moment now. They did kind of come down a little bit. I mean, yeah, they closed the regular session at 631 and some change. They came down to 614.19 just a minute ago. And then they came all the way back up to 630. So price is kind of bouncing around a bit. And this stock, you know, even though it's a $600 stock, it trades on low volume. You can see the volume that came in today so far, 426,000. Average volume is 271,000. So I suppose they had a bit more volume, but overall they trade on low volume. Okay, it just wicked up to 651. There we go. Okay, got some buyers on CACI. It's probably the more fundamentally sound stock out of the 2 of these. Data's got to be out. Let me check. Sitting at 642 now in after hours, up almost $10 a share. What's up, Shin? Good to see you. I see you in a lot of my streams. Looking like that Coca-Cola spread we opened up on Tuesdays going to work out just fine. Kind of got threatened a little bit with the volatility today. Here's Coca-Cola on the right here. Right after the opening bell rang, kind of sold off down to 70.83, but finished the day strong. Recovered all, V-shaped recovery, ugly V-shaped recovery, but nonetheless, totally recovered all that selling, and now our spread is right back in the heat of things. It's funny because this morning I was up 65% on that spread, and then I watched that 65% kind of evaporate when it sold off. You can see this red line here. That's my break even on Friday at expiration. So it came down and bounced right off of my break even line, and then it was off to the races and going in our direction. So I haven't even checked the position in the past few hours. So Shin said you closed it out for profit. Okay, so you took profit. Nice. We're on fire with these spreads. What's that, like our 8th spread trade in a row? That's a winner. We've been on super fire with these spread trades. I'll go over that towards the end of the stream. It's almost 4:20 here, so probably around 4:30. I'll go over those spread trades. We've been just slam dunking those spread trades. But quite the Pookie says 4:20, you say? Okay, so let me go back to Kinder Morgan. Kinder Morgan it fell below that golden fib, $29 a share. Price action looks sloppy and real spotty. You can see like these weird looking candles. I wouldn't even call it a doji candle. It's just like a little hash mark. So ugly price action on Kinder Morgan, but they did double beat and they do have double digit year-over-year growth EPS of revenue. So I like the earnings. I think it's fine. And Kinder Morgan's going to do their earnings web call at 4:30 p.m. Eastern. Again, that's the link on my screen. But let's go back to CACI. So this thing is a little bit all over the place. Again, closed the regular session at $632.56. Came down to 614.19. Then it went all the way up to 651. Geez, it's like a $35 spread between the high and the low. And now it's sitting at 636, still up 0.5% in after hours. Let's see what the data is. Let me refresh this. Then we'll find out when they're going to do their call and how to get there for everybody. 215 people in the stream now. I do these streams every Tuesday, Wednesday, Thursday, earnings stream. Tomorrow will be a bit more exciting. Intel is reporting tomorrow, and they've been crushing it lately. I had them pulled up. I was also looking at Netflix because they had their earnings yesterday, and they had a negative reaction, but they've retraced back up. They were trading. Let's see. Yesterday they were trading in the upper 80s, around $88. They sold off all the way down to 80.38, and now they're back up to 85.58 today. So there's definitely dip buyers on Netflix, and again, they the reason why it sold off is because Netflix reduced their Q1 guidance for EPS and revenue, but then they followed it up by saying they expect a very, very strong second half of which H2, right, of 2026. So I figured it'd be a dip buy opportunity because they do plan on having some pretty good numbers for the second half of the year. So I could see investors trying to front run that and buy the dip on this. And it looks like that's kind of what's been going on. Hasn't retraced all the way back up to 88 yet, but it's definitely on its way. So grats to anyone who bought the Netflix dip yesterday in the post market. And again, going back to SPY and why we kind of rallied into the end of the day here. Trump basically withdrew his threat of tariffs for the European countries that were trying to back Greenland. And it looks like they might have a deal to acquire Greenland. So, this just shows you how wild the market's been lately with the geopolitical stuff and things of that nature and the wild price swings we had today. It's a wild ride. So you got to be on your P's and Q's when trying to trade this stuff, because one little post on X by Trump, the whole market, can shift. So you got to be careful. Got to be careful. All right, let me a little after it's 4:23 now. We'll go back to CACI. Yeah, just spotty price action. Both these stocks. And sometimes, we don't have much to choose from. So I was trying to pick the two that I think would be the most popular. Again, tomorrow's going to be a lot more funner because Intel's reporting. Let's take a look at what's reporting tomorrow here. Let me go to right here and Thursday. Yeah, we got Intel reporting tomorrow. Forecast EPS 0.08. Forecast revenue 13.38 billion. Intel's been on a nice run. That's what I was going to do. I was going to pull up Intel. And then I got sidetracked talking about Netflix. Intel's been flying. This thing trading in the mid 50s now. Who would have thought, this thing was trading in the 20s for so long. And you pull up the daily chart here and zoom out. I mean, you know, we're talking a whole year. It was trading from basically, I'm going to call it 19 to 26. Just traded in that range for a whole year. And then that news dropped about NVIDIA investing in them. And it's been off to the races since then. More than doubled their stock price in less than a year. So they finally broke above that 26 resistance. They finally broke above it in around, I'm going to say September. So from September, just like the middle of September, so October, November, December, January, I mean, in only 4 short months, Intel has doubled in price. So grats to any Intel investors that held strong when they were trading down here in the low 20s. It definitely paid off. Your patience paid off. You should have doubled your money by now if your average, you know, was down here in the 20s. So grats to the Intel bulls. And, you know, Intel is a big name, you know, so definitely was a good trade if you rode that from the 20s to where it's at now. Maybe taking profit along the way. Okay, still not much movement on Kinder Morgan or CACI. Not really too exciting. Let me find out when CACI is going to do their call, and then we'll go over some spread trades. Okay, let's take a look. Let's see if they dropped the press release. I'm sure they did. They should have released the data 10 minutes ago. Okay, let's take a look. Let's take a little look at this here. Okay, all right, so they're not doing their conference call until tomorrow morning at 8 a.m. Okay, so let me put this link in the comments for everyone. There we go. Over 200. Well, there's 225 people watching now. Good to see y'all. Okay, I put the link in the Discord for anyone. Hey, what's up, Ghost Chicken? I love the name, by the way. Spice Matters. Good to see you. So anyways, that's the link here. I'll put it there. CACI Investor Relations website. That's where you can, the link to the web call, you put it on your calendar for tomorrow morning at 8 a.m. Eastern, and you can watch that. You take a look at the press release real quick. And let's just see. So revenues of 2.2 billion. That's up 5.7% year over year. Net income of 123.9 million. That's up 14.5% year over year. Oh, excuse me, that's the EPS is up 14.5% year over year. Adjusted net income of 150.7 million. And here's some commentary right here from the CEO. His name is John Mengucci. He says our strong second quarter results demonstrate the continued successful execution of our strategy and the value of our differentiated capabilities. With healthy free cash flow driven by solid revenue growth, we're delivering on our commitments to shareholders while addressing our customers' most critical mission needs. And he goes on to say, through bold strategic investments, we have built leading positions in electronic warfare and agile software development while continuing to strengthen our technology portfolio in space with the planned acquisition of Arca Group, all areas vital to national security. With our strong results, expanding backlog, and robust pipeline, we are raising our fiscal year 2026 guidance. So they raised guidance, good to know, and remain extremely well positioned to achieve our 3-year financial targets and drive long-term value for our customers and our shareholders. So you can see the breakdown here of the results, revenues, income from operations, net income, EPS, net cash provided by operating activities, free cash flow. And let's see here, second quarter contract awards. Contract awards in the second quarter totaled $1.4 billion, with approximately 70% of new business to CACI. Okay, and they were awarded $265 million in new contracts and additional work on current programs within the intelligence community to support various national security efforts. Pretty good. There's a reason they're trading up here in the 600s. And then here's a breakdown of their guidance. So you can see how they increased it right here if you're interested in their guidance. You can see the prior guidance, 9,200 to 9,400. They increased it to 9,300 to 9,500. That's on the revenue side. And that's in millions, by the way. Adjusted net income, that also was raised. Okay. And free cash flow projections for guidance were also raised. So they're raising guidance on quite a few items here as far as revenue, net income, EPS, and free cash flow. Guidance was raised on all those fronts. And again, their conference calls tomorrow morning at 8 a.m. Eastern. So if you're a CACI investor, you probably want to attend that. They got 26,000 employees. It's a big company. And they're currently members of the Fortune 500, the Russell 1000 index, and the S&P Midcap 400 index. So they're in quite a few indexes. So good stuff. I think the earnings for both companies are good, even though the price, the prices aren't really catching a bid. But the earnings data looks good. It's what investors probably wanted to see. They both beat EPS. They both beat revenue. Kinder Morgan has double-digit growth for EPS and revenue. CACI raised guidance. It looks good. Yes, exactly. Spice Matters sounds like a great ER, but the street don't care. Yeah, it's like, I don't know if they're still, big money still digesting the data, and maybe it eventually makes a move, and maybe it makes a move when they do the web call. Kinder Morgan's web call just started a few minutes ago, so we'll see if they end up making a move. And CACI's web call isn't until tomorrow morning, so maybe they finally moved by then. It's still got like 3.5 hours left in after hours, so we'll see. Yeah, let's go over some of these spread trades to kind of wrap things up here. This is the Discord I'm part of right here. This is my alert channel. This was the Coca-Cola spread I opened up on Tuesday. Only a 3-day hold. Wednesday, Thursday, Friday. Expires on Friday. Paid $18 a spread. Need $100 in buying power to trade it. But hey, 18% return on capital in 3 days. I'll take that any day. Chance of profit was around 69% on the trade. So the purpose of the trade is I basically just want Coca-Cola to stay above my break even by Friday. And that's my break even at expiration. So figure out the break even, you take the strike that you sold to open. So you're trading two put contracts. It's the $71 strike, put strike, and the $70 put strike. It's all done on one trade ticket when you open it. The $71 put was sell to open. The $70 put is buy to open. Yes, you can be a seller on the opening transactions. Some people still don't know that. They just think if you're a seller, you're closing something out. That's absolutely not true. You can be a seller when you open a contract, okay? And that's specifically for credit spreads. Anytime you're collecting credit or you're short a contract, that means you're the seller and you're actually getting paid up front to open the contract. The person on the other side of the transaction is the one paying the debit, not you. But anyways, the purpose of the trade, I just want it to stay above my break even at expiration. And to figure out your break even, you just take the strike you sold to open and subtract out the credit you received on the spread. It's 0.18. So you know your break even is 70.82. And so that's really it. That's there's not there's not any mystery behind the trade outside of I just want Coca-Cola to stay above $70.82. You see this red line on my chart. That's the level I need it to stay above. It came down. That level got threatened this morning, didn't it? Coca-Cola came down to 70.83, so it was 0.01 above pretty much my risk level. I don't like the price of Coke below that. So, that happens every now and then where our spread will get threatened a bit, but it just so happens this one bounced right above our break even at expiration level and then went on to rally for the remainder of the day, going back in our direction. I'm pretty confident it's going to hold above 70.82 by Friday. And look at it this way. If it has a bullish move tomorrow, we won't have to hold it till Friday. We could probably take the bulk of the profit before Friday. So that's the Coca-Cola spread I opened up yesterday. And the reason why I did that is because when the markets got real volatile, I noticed, money is obviously coming out of certain sectors, and you got to think, well, if it's coming out of, some of these sectors, where's the money going, right? And I just simply pull up the sector information. You can use barchart.com to get the sector information. And I noticed that a lot of money was going to consumer defensive stocks, specifically beverages and household products. And Coca-Cola ended up benefiting from that. So I saw some buying pressure on Coca-Cola, specifically the run it had yesterday. And we just kind of followed the money, and the spread's doing well. Few people in the Discord had already took profit on it in the afternoon today, I think. I'm still holding mine. So I want to get at least maybe 75% on it or more. And as long as it holds up, I'm thinking I'll probably have that on the table by tomorrow, and then I'll take that profit. So that was the Coca-Cola spread. Here's just a breakdown of my recent spreads. The last spread trade I lost was actually a hedge trade. I opened up, I think it was early December or November, just a few months ago. And that was more of me buying insurance to hedge the positions I was long on. So I was okay that was a loser. But since then, done a spread on NVIDIA, done a spread on Mara, done a spread on Disney. We did a spread on Bull. We did a spread on Google. We did a spread on SoFi. And then we did another spread on NVIDIA. All those were back-to-back winners. You can go in my alert channel and see, I obviously alert these in real time when I enter them. But I just got out of a wheel trade on UMAC. My shares got called away after I was selling cash secured puts for income. I got assigned shares, and then I started rinsing and repeating the covered calls. The total buying power I used was $2,400. I pulled in $472 in profit. So that equated to a 19.6% return on capital in 3.5 months, which would be an annualized rate of return of 67%. So I was very, very happy with the UMAC wheel results. And here's my Fidelity account that breaks down exactly what my cost and proceeds were on the position. So this is the profit I made on the shares, which was $307.33. Now, some of that $307.33 profit, some of that was the premium I collected on the cash secured put trade that I got assigned on, because what happens is you do collect credit on the cash secured put, but when you get assigned the shares, you actually don't realize that profit from the credit on the cash secured put until your shares are liquidated, if that makes sense. So the cash secured put profit was kind of baked into the share profit a little bit. And then I had 2 rounds of covered calls. I sold the 13s, only made $20 on that one. But the next cycle I sold the 12s, and You can see I brought in $144 on that. So add up the profit from the share position, which included the cash secured put, and then the 2 covered call trades. Boom, pocketed $472, and it was great. I loved it. It was a great trade. A lot of people in the Discord traded that with me and made similar amount of money, if not more. I know there's some people in the Discord that are trading with bigger lot size than me, but that's okay. Here's the NVIDIA spread. Got 77% on that. Only made $85 on that, but that's okay. It was an easy trade. And I took that profit on the 15th. So that was just recently, last Thursday. And that setup was NVIDIA was trading at 184.72 at the time. So I put a bull put spread at the 181 and the 180 strike. That paid $22 a spread, $100 in buying power needed. So of course that would be 22% return on capital, and the probability of success on this trade was around 74%. So I was very happy taking this trade. I wasn't sweating it at all. And I usually do a handful of these, so this would just be the payout on one spread. I think I did 5 of them on that one, and only held that one for 2 days. I opened that on the 13th, which was last Tuesday actually, and then on Thursday the 15th, right here, is when I got my 77% profit. So I just went ahead and took it. 2 days, easy trade, high probability of success, easy $85. And so that was the setup on the NVIDIA trade. Let's see, this is the SoFi spreads that I did. 75% on that. It was another $105 in the pocket. And this is the Google. And then I actually had a few spreads going at the same time. This was a Google spread. I got 72% on. So that was another $103. You make $100 here, $100 there, left and right, $100. That shit adds up. At the end of the month, you got a few $1,000s. You know what I'm saying? So that was this was the SoFi spread. Yeah, you can obviously tell I trade a lot of spreads, right? I love trading spreads because I'm not too worried about intraday price action. As long as the underlying stock price stays on the correct side of my spread, it's a winning trade. So that's why I like trading the spreads. But this spread was neat. This bull put spread on SoFi. SoFi was trading at 26.85 at the time. So I sold the 26 put, sell to open, and then I bought the 25 put, buy to open. You do it all on the same trade ticket, and then it spits out the credit, right? So this paid $27 credit, $100 in buying power needed on that. So that's 27% potential return on capital. Chance of profit on this one was 68%, so I was pretty happy with that. And I basically just needed SoFi to stay above 25.73 by the expiration. And I opened that trade up on January 6th, so just a few weeks ago. And then I took profit on the 9th. So I only held that for 3 days. The expiration date was January 16th, and I opened it on January 6th. So that's a 10 calendar day until expiration. And this is a perfect example. I don't really hold these to expiration. Usually within a few days, we got plenty of profit to take, and I'll take it. And we'll go over this Google spread now. I guess that'll be good. So I got 72% on that. Looks like a handful of people took that. And this is what that trade looked like. This actually was a $2.50 wide spread. So this required $250 in buying power. So in the option world, everything's times 100, right? So if the spread is 2.50 times 100, that means you need $250 to trade it, just one spread. But this spread paid $71 for each spread. You collect that as a credit when you open it, so you're getting paid to open it, and which equates to 71 divided by the width of the spread. This was a potential 28% return on capital. This was only a 10-day until expiration. You can see up here. And so you know, chance of profit on that was 67%. So I was cool with that. And I held that one for, let me see, for 6 days. No, 5 days. Only held that one for 5 days. Wait, excuse me. That was okay. January, 7 days. I held that for 7 days. But when I opened it, the expiration date was let me see. The expiration date was okay. It was about 10 days away. So I held it for about 75% of the time that was on the contract. So that was a good one. But yeah, you know, just wanted to show everyone the recent spread trades I've been doing, because we've won like the last 8 spread trades in a row. And I'm not going to sit here and tell you I win all my spread trades, because that's absolutely not true. I definitely got a super high win rate, probably 80-90% or something like that. But every now and then I will have to take a loss on a spread. And that's just risk management. You know, I'm not going to let these spreads go to max loss. Like if a spread goes against me, I'm definitely going to have some rules in place, some levels where if the underlying stock price comes to a certain level, I'm just going to cut the trade loose and get out of it, you know, for a loss. But the loss is manageable, because you know, there's ways to manage these spreads to keep your risk reward at 1-to-1. That way, if you do have a losing spread trade, you can make it back on the very next trade. But, you know, sometimes people that trade these spreads, they don't manage the trade if it goes against them, and they end up taking a max loss on it. And if you're at like a 2-to-1 risk reward on the overall trade based on the width of the spread and the amount of credit you're receiving, so that means you're basically risking $2 to make 1, which is not ideal, right? I mean, of course, when you're trading naked options or even just stock and equity in general, you want to try to have a 1-to-3 risk reward, where for every $1 you're risking, you can make 3. That's a proper risk reward. But with out of the money credit spreads, because of the amount of credit that we collect on the width of the spread, a lot of times the risk reward is flipped, where you might be risking a few dollars to make 1. That's just how it rolls with out of the money credit spread. There's no way to do anything different there. You could probably do a debit spread, but with an out of the money debit spread, you will need a directional move on those. So it's kind of, you got to pick and choose your battles there. But there's a way to manage the credit, the out of the money, the credit spread, where if it is a 2-to-1 risk reward, there's a way to manage that to keep it at 1-to-1. And there's a few things you can do, depending on how close your spread is to the underlying stock price. You could use your break even at expiration as a level on the chart, or if the underlying stock price comes to that level, you could consider stopping out of the play. It's probably a red flag that you were wrong about the trade. Or you could do, a lot of spread traders use, it's called the 2x or 3x credit receive stop loss. I like the 2x credit receive. So basically, like for example, on that spread I did on Google, that was 250 wide, and I collected a $71 credit. A 2x credit receive stop loss means if the value of that spread ever got to $140, that's your signal that the trade went against you, and you should probably stop out. Now you would pay $140 debit to close it out, but don't forget, you already collected $70 in credit. So your net loss would be 70, which means you're risking 70 to make 70. So now you've kept your risk reward to 1-to-1, and you can easily get that back on the next trade. If you let it go to max loss though, and if it's a 250 wide spread and you only collected $70 on it, your max loss could be $180 if you let that go and didn't manage it, and it went against you and you just didn't do nothing about it. You know, how many trades is that going to take you to get back if you lose $180 max loss and you were trying to get 70 credit out of it? You know, that's 2.5 trade hole that you just dug yourself in because you didn't manage it at a 1-to-1 risk reward. So there's definitely some creative things to do to keep your risk in check with these. It's not just a set and forget deal, okay? But anyways, you can tell I love talking about spreads and I love trading spreads. So yeah, if you're interested in spread trading and maybe you just didn't know where to start, maybe you tried to look it up on YouTube and there's just 1,000 videos out there and everyone's saying something different. But I teach this in the Discord, and I teach it. I explain it as easy as possible for people to understand clearly the metrics behind the trades. What's your max loss? What's your max potential gain? Where should I keep my risk reward? What strike prices should I choose? Should I be using delta to choose my strike price? What expiration dates should I choose? Anything you can think of. That's what I show everyone how to do in the Discord. So if you've been interested in trading spreads and just didn't know where to start, definitely come to our Discord. I can show you. And it's something you can add to your toolkit. And it's a new, maybe a new way of trading for you that you didn't know before, that now you're going to know forever, and it's invaluable to learn a new skill, right? A new way of trading. And also, if you're looking for 4 high probability trade setups sent to your inbox every morning at 9 a.m. Eastern, check that first link in the description. It's completely free, doesn't cost anything. We've gotten a lot of great feedback on those watch lists that go out every morning. But yeah, I really don't got anything else. Let me just check the Discord. Okay, yeah, nothing in the Discord. No questions, comments, or concerns. But yeah, we got about 275 people tuning in right now. So it was good to see everyone. My name's TheSwingingBull on Discord. My real name's Benjamin. Most people call me Ben. But yeah, if you join the Discord, I look forward to meeting you. I hope everyone enjoyed the stream. I hope everyone has a great night. Until next time, I'll see everyone in the very next video. Cheers.